You slave your 40 hours a week, 60 hours a week, how the monetary system is working against you. More like wage earners starting to wake up to the fact that there's something fundamentally wrong with the monetary system for years, because it's going to get hectic, man.
Today, we're going to be talking to the Australian electrical engineer who went all in on Bitcoin. Daz, you're a Sparky by trade, mate, and an everyday bloke just like you and I. Now, as I understand it, you were also struggling to make ends meet until you found Bitcoin. But for the viewers watching at home, let's be clear. Bitcoin is not a get-rich-quick scheme or magic internet money. It is most likely your last chance at freedom. Daz, why is Bitcoin so important now? And what made you write an entire book on the subject of Bitcoin?
I think one of the discoveries of a lifetime for everyday wage earners. And that's really what I'm passionate about. That's the people I like to speak to. That's why the reason we wrote the book. So in this monetary system that we're trying to navigate through at the moment, you have to go down the route of becoming nearly an expert in economics and finance in order to beat inflation. And that's not a world that I want to live in. And so that's when I discovered Bitcoin, and we can talk about what that means for me. Why I went basically right down the rabbit hole around trying to understand it. Well, first of all, as an engineer, I tried to break it, realized I couldn't. And that's really where the discovery sort of started and the fascination started. And then once I got to that realization that this is a tool that will empower people to be able to beat inflation, get ahead, and make meaningful improvements to their financial situation. That's what the sort of impetus between starting up an education platform and writing the book.
Cool. We're going to dive into Looking Glass Education, where you are educating the everyday person in regards to Bitcoin. One of the things you said, Daz, is Bitcoin is a tool to beat inflation. Now, the everyday person watching this may not understand what inflation is, but they feel inflation. So can you break down what is inflation?
Yeah, so for everyday wage earners, like you rightly put, the inflation really means the increase of price of goods and services. And that's really where it hits most wage earners in the back pocket. So we all know now at the moment, we're living through this period of pretty high price increases. We see it at the fuel bowser, we see it at the groceries. That's probably for most, young families, struggling families. That's really where it's hitting them the most at the moment, is the grocery store. $100 basket of goods. If you spend $100 at the grocery store now, you're barely even filling a basket, let alone a trolley. And that's really the easiest way to explain inflation, is that increase in price of goods and services. Now, what the effect on wage earners is that our wages don't catch up to that. So if our prices are increasing by 7-8% year on year, and your wage is not going up 7 or 8% year on year, you're effectively going backwards. It's like you are getting a pay cut each and every year that your wage doesn't keep up with inflation.
The electricity prices went up like 20-25% this year as well, which is over and above the 6-8% inflation. People are only getting pay rises maybe 4 to 5% this year, which is actually not what the real inflation numbers are. For people that are just hearing this conversation for the first time, inflation, everything's more expensive. How's Bitcoin fix this?
So Bitcoin's a finite, scarce good. So I think it's probably important to step back a little bit and have a look at how we got to where we are with this inflation. And fundamentally, that comes all through money printing. So in our world of finite goods and services and finite value, if you like, there's some arguments around our ability to expand at different times on those things, but we ultimately do live in a finite world of finite resources. And what happens in a natural market is the supply and demand of a good and service, the supply from people and the demand from the people and the supply of that good and service will find an equilibrium in price, the balance between that supply and that demand. Now, what happens is if you've got a fixed supply of goods and services in the world, but you introduce more currency units, there's more currency units competing for those goods and services. Now, the way that that's injected is not always beneficial to a wage earner. We're actually the furthest down on that pipeline to be able to receive the new currency units as they're injected. And that's something called the Cantillon effect, which I can speak to in a sec. But ultimately what happens is when they money print to suppress interest rates, and that lever is manipulated in order to try and create economic stimulus through turbulent times. So COVID was this massive shock to the world. Whether you agree or not on the lockdown policy, it's what happened. We locked down. We stopped making goods and services. We stopped manufacturing. People stopped going to work. So the actual supply of goods and services was constricted. But then what they did is to counter for the anticipated economic fragility that was going to come from shutting down an economy, they injected a whole heap of currency units. Now, anybody on this call can go and Google, and maybe we'll put on the show notes a link to the M1 money supply. From the US is probably bad, but you can look at the M1 money supply for Australia as well. And what you end up seeing is around 2008, the global financial crisis, we see an increase in currency units. And then 2020, this chart goes absolutely vertical, absolutely parabolic. It's a shock when you actually show people this graph. And basically what that means is they introduced a whole heap of new currency units competing for a constrained amount of supply of goods and services, and inevitably that leads to price inflation. That's just how it works. And what we're doing as wage earners, we're the last one in line to benefit from any of that that injection of those new monetary units, and we feel the pinch. Like I said before, where our wages aren't keeping up now with the increase in prices for those goods and services.
Yep. And to break that down really simply, I've brought this chart up, this M1 for Australia. You can see there it's just gone straight up and to the right. This is the amount of money that's out there floating around and circulation. And Daz, correct me if I'm wrong, but if I was to break it down really simply for people, they've probably realised that their house may have doubled in value over the last couple of years since COVID. And if they think about their house like Bitcoin, there's only so many houses out there. It takes a while to bring more houses out onto the market. Same with Bitcoin. There's this process called mining we can get into, or you can check out another video I did with someone that runs a Bitcoin mining operation here in Australia. But with the Bitcoin being so finite and so scarce, when that money comes out and they're printing so much, it has to find somewhere to go, whether it's real estate or it's Bitcoin or it's gold, and that's going to lift those prices up. The scarcer something is, the higher those prices are going to be rise. Is that an easy way to be able to explain it at a basic level, Daz?
Absolutely. You hit the nail on the head, Sean. Bitcoin is the most finite supply of a monetary asset that's ever existed. And we can prove that through basically it's computer code, computation, and it's distributed, and everyone enforces the rules on everyone else. And that's just probably the easiest way to understand this distributive nature of the code. And embedded in that code is an absolute finite fixed cap supply of 21 million coins. I guess the easiest way for people to come to terms with what Bitcoin is most people come for the number go up technology. Okay. And what that essentially means is that because we have a fixed amount of supply of this monetary asset, demand is ever increasing. And when we look back at that example I was just using between the supply equilibrium, the price equilibrium between supply and demand of a good or service, Bitcoin is a fixed supply of something, and demand is increasing every single day. With people like you and I having these conversations, people more like wage earners starting to wake up to the fact that there's something fundamentally wrong with the monetary system. And then that what inevitably leads you to is, how did we get here and what can possibly fix it, right? So I'm an engineer by trade. I'm an electrician by trade. I'm used to getting presented with problems and then used to try and find solutions. That's what I get employed to do. So when I started looking at myself and my own personal circumstances, I was very lucky. I was in a position where I was earning a good wage, and I started investigating how is it that what do I need to do in order to shift the needle here on the savings on the excess cash that I do have week to week. And I was in a lucky position to be able to do that. But that's where I went down the rabbit hole around investing. What is actually investing? What is stock investing? And how does interest rates and monetary supply, like you alluded to earlier, it's directly correlated to asset price inflation as well. So when the prices of assets inflate, it's directly proportional to interest rate suppression and interest rate control, and they do that through this thing like we've been speaking about, money printing. And when you tear the lid off that and you start to look inside, you actually realize that our monetary system is very, very fragile. So it naturally led me then to, okay, so if that's our system that we're operating in at the moment, what could possibly fix this? And gold bugs, this is where I have a bit of empathy for gold bugs over the years. They've had it right all this time. They're like, we need to go back to a gold standard. We can't be operating in a monetary system that can be printed out of thin air that has no scarcity to it. Because as soon as you have a system that has no scarcity, you lose your fundamental value. And that's really the main function of money, is a store of value. You slave your 40 hours a week, 60 hours a week, whatever you guys are doing, working your butt off to try and provide a roof over your head and food on the table. And like with this inflation, you're not getting anything. You're not left with anything at the end of the day. And even if you are lucky enough to do that, inflation erodes away the purchasing power of that money. So you're forced to invest. You're forced to go out and take on risk. You're forced to go into stocks. And this is where we're coming full circle to this thing about Bitcoin. Gold is easy to understand. It's a lump of rock that I can hold in my hand, and it's scarce. We know it's scarce. We can't, alchemists over the years have tried to, invent a way to make new gold, and they've ultimately failed. And that's why gold has ultimately served as a form of hedge, inflation hedge protection for thousands of years. The problem with gold, though, is we live in a globalized world where we've got to transact globally. We're settling trade imbalances. We've got globalized supply chains. We've got globalized manufacturing bases, and we're enacting these trades that, if you were to go and settle in gold, doesn't keep up with technology. You need to be able to transfer value instantaneously with as less friction as possible and with as least trust as possible. And this is really where gold ultimately fails. So say you're France and I'm Japan, and I send you goods and you owe me a debt at the end of the year. We're going to settle that. I don't want your euro. You don't want my yen necessarily. So we might settle in gold. But you as France, you have to package it, secure it, weigh it, send it to me. And then when I receive it, do I trust you? No, I'm probably going to sample it, melt it down, recast it, count it, weigh it, all of these sort of things. And that is a very expensive exercise, and it takes about 6 to 12 months to enact. Now, that's not practical in a globalized world where we're used to commerce at the speed of light. The natural progression then, as we started to enter in this globalized world, is to introduce a trusted intermediary. So one example of that was the Bank of International Settlements used to play that role. So they had a vault, and they'd have a big pile of gold here with France's name on it, big pile of gold here with Japan's name on it. And a really good example of why this trust system fails over time is World War II. Germany invades Czechoslovakia. Czechoslovakia have got their pile of gold. It's got Czechoslovakia's name on it. Germany invades Czechoslovakia, gets in contact with the Bank of International Settlements and says, yo, we just invaded Czechoslovakia. That big pile of gold's now ours. And the Bank of International Settlement says, okay. And that was it.
Yeah.
So how do you settle trade imbalances now without a trusted intermediary? And that's really where a lot of people can start to understand the value proposition of Bitcoin, because you can send it in a trustless way, and we can settle very large transactions for very low friction and zero trust. And that's a big thing to put out there without elaborating on it, but that's essentially what Bitcoin is able to provide. A new version of, a lot of people hate this analogy, but it is theoretically at its fundamental level a new version of digital gold, a way to settle large transactions without trust.
100%. Daz, you actually wrote a whole book on the subject of Bitcoin and how Bitcoin can help the wage earners or some of them that feels like they're a wage slave, and then you break down the monetary properties of it, and you do a really good job. It's a very quick, easy book to be able to read, and you lay it out very systematically for people there, and there's some amazing links in the background for people to be able to read. So I definitely urge everyone to check out that book. I'll put it below and the links. It takes a little while to be able to understand that it is scarce. It's been engineered to be the best form of money that's ever existed. There's all these properties here. I want people to hold that thought, and if they want to dive deeper into it, Bea's for Bitcoin. It's a very simple, easy to understand book. But Daz, you're also doing a couple of other things. Let's dive into the education, and then let's talk a little bit about coddle, because there's some very exciting things that are going to help the everyday person to be able to understand Bitcoin's not complicated. It just takes time and it's just information. I think you've done a really good job. So the floor is yours. I'll let you take it away.
I appreciate it. And look, it comes down to the fact that I'm a bit obsessive when I learn about something. When I discovered Bitcoin, like I said before, I tried to break it. So I've literally spent thousands of hours. And a lot of Bitcoiners at this stage of the game who've got it early have had to do thousands of hours worth of study into this thing to really understand a lot of different concepts around cryptography, distributed networks, the monetary system, inflation, all of these things. So what we try to do with Looking Glass Education is really speak to the wage earner. We know most people are flogged out. They're going to work. Both mum and dad are working. You know, the kids are in daycare all day. They're working their asses off just to try and get ahead. When they come home, the last thing they want to do is pick up a book. You know, the last thing, they don't have the thousands of hours of time to really understand this thing. And we firmly believe that this is something that everybody needs to understand. So this was the premise that we had in mind when we created Looking Glass Education, is like, how do we take thousands of hours worth of understanding and study and distill this down into some bite-sized educational pieces? So the first offering that we've got was a free course, and it is free. You can go there, register on there. It's called the Foundations course, and it takes us through a lot of the themes that we've been talking about on this chat today around how does money work? How did we get to the system that we're in today where they can print it out of thin air? What are the byproducts of this monetary system, this fiat monetary system that we're operating in for you as a wage earner? And then what are your investable options moving forward to protect yourself? And this is where we posit Bitcoin as an option. Then the book was, it's going to be a course as well. We're working on this. It will be a free course. If you can afford the book, go and buy the book, and it helps us support putting this education out.
For everyone watching, you can never, ever underinvest in yourself. It's a very short book. It's an amazing book. Go out, buy the book, buy 2 copies, one for yourself and one to give away. Ultimately, it's a very easy way to understand Bitcoin. Daz, as well with Seb, your business partner here, you've done an amazing job. You haven't asked me to shill this book, but it is absolutely incredible. And that's why ultimately we're having this conversation. You've done such an amazing job breaking this down into such a simple to easy understand way, even simpler than this conversation that we're having today. You really break it down to a base level of understanding. It's very grounded. So I urge everyone. Anyway, sorry to interrupt, Daz. It's a great book.
I appreciate the support, Sean. And that was the intent, right? Is to take and make it bite-sized, understandable, not something you really have to invest a lot of time in. So we are developing that in the back end as a course at the moment. So you can read it as a course. It'll be the same content as the book. And we're also recording it so that you can jump in your car and you can listen to it on your favorite podcast app. If you're not a big reader, because that's the other thing, right? Is not everyone has the time, or is even able to stay awake enough to read this sort of content. So it will be recorded as well in an audio version. So the 2 premises behind those offerings is the first course is why would I want to own Bitcoin, and then the second one is, right, how does it work? How does it actually work? So again, we tried to break it, and realized, after 4 years of study, I can't break it. So we just tried to break all of those concepts down into a fundamental understanding. Because that's no sugarcoating, Bitcoin is volatile. So inevitably, you're going to buy a big bag of Bitcoin and it will drop down, 10% the next day, and you're going to feel pretty crappy. So this is why it was really important to supplement that why you want to buy Bitcoin into what have you actually bought and understanding what you've bought, because it helps with your conviction in this volatile period, because Bitcoin is a long-term savings thing. It's not, like you said at the very beginning of this call, it's not a get-rich-quick scheme. This is long-time savings technology. So over a 4-year cycle, there is nobody who's invested over 4 years who's gone backwards in the history of it. And there's a very good argument to suggest that that's going to maintain moving forward. And that comes down to this, like we touched on earlier, the supply-demand equilibrium. Demand is increasing, supply is limited, number go up. And that's ultimately but over a long time. So we wrote the book as another way for you to be comfortable with what you own, because you really need, and this is the big flaw in a lot of people's investment methodology. Like if you go and buy stocks, theoretically, you should really understand that. But you're buying a share in a business. You're buying a part of that business. How many people own
Yeah.
BHP Billiton and don't know what the hell they do apart from dig some, minerals out of the ground? What's their model? What's their profit? What's their debt levels? Like, you don't understand it. And this is why Bitcoin, we posit, it's the simplest asset to own. Once you understand how it works, there's no more balance. You don't need to investigate any balance sheets. You don't need to do any deep dives into their quarterly reports or anything like that. You just stack it in your DCA. That's dollar cost average. Buy it in small pieces every single day, every single week, whatever you can do with the spare cash that you can accumulate, and you come back over the long term. And that's ultimately what we tried to achieve with Looking Glass, was just to frame all of that up and give an offering free and accept. We didn't want price to be a barrier to entry to this vital information. So that's why everything's free. You can go on there, you can do it for free, do it at your own pace, and ultimately come away understanding what this thing is and what it can mean for you and your family.
One of the things you touched on there is anyone that's been in Bitcoin for a while has put in thousands of hours. I've worked out over the time I've been here, multiple of thousands of hours. It gets insane. You become very passionate. But for people that are just hearing about it, leverage the thousands of hours that people all around the world have done, disseminating, whether it's into a book or into a course or whatever it is. At the start, I said Bitcoin is potentially your last chance at freedom. We've got a couple of CBDC pilots and stuff all around the world. I don't want to get into the politics of CBDCs and stuff, but why Bitcoin, a digital currency that's freedom based over potentially like a central based digital currency that is gate kept, or it's controlled by an entity, whether that's the government or maybe the Federal Reserve, who is therefore creating that currency?
Yeah, so ultimately, like you said, it's freedom technology. So it's completely open source. You can participate to it to any length that you wish. If you are really, really nerdy, you can become a developer. You can work on the base code, and you can propose that to the community for acceptance. If you're not technically minded, you can just buy it and own it and self-custody it. But what it basically does is it empowers you as the individual to take control of your own monetary assets. So if you compare that to the banking system, your dollars in a bank, you're beholden to a centralized entity controlling a ledger, dictating how much you own. And you are also in a way beholden to the regulations that exist within that system. So I don't know many Australians. It's surprising to me how many people don't know about this bit of legislation. But in 2018, there was a bit of legislation that pushed through, better known as the bank bail-in laws, but it was the Financial Services Regulations Act of 2018 or something along those lines. Within that system, they actually put in through the dead of the night, with not many people in the chamber and the Senate. This is all public information. You can go and don't trust me. Go and prove it. Go and verify it. They passed this legislation in the dead of the night, which basically enables banks to bail in your savings deposit as an unsecured creditor. So if you've got $20,000 in the bank, right? If you're lucky enough to have that much money in the bank, and the bank comes into financial instability, they're running into trouble, they actually have now legislation that authorizes them to seize a portion of that deposit and issue you a share in that failing institution. And there's zero you can do about it. So people don't realize how much exposure they have to banking systems. And I also, like you mentioned before, a CBDC is going to be a government issued money, which they can potentially put controls over in stuff like expiry dates, where you can and can't spend it, whether you potentially do internet searches that are outside of the approved internet searches. These are the sort of things that have absolutely been enacted within, like, examples of this where it's already in play, like China. Not to say we're going to copy and paste China's model, but the ability that the fact that they have the ability to do so should just be a bit of pause for concern. You just stop and think about, what is it that will they go to those lengths? And what Bitcoin is a permissionless system. Nobody can stop me from sending you sats, or which is a denomination of Bitcoin. No one can stop me sending you Bitcoin between a peer-to-peer exchange. It is a a digital bearer asset. So I can I can prove without a shadow of a doubt that when I own the keys to unlock my Bitcoin, I own that Bitcoin. It is on a public ledger that's equally distributed globally. My copy of the ledger is compared to your copy of the ledger and compared to tens of thousands of other nodes. So we're all verifying the truth. And then it basically says in not so uncertain terms that, Daz owns X amount of Bitcoin on these addresses, and he owns the keys to be able to unlock the ability to spend that Bitcoin. And when I want to transact, I'm the only one who can authorize that. I authorize any transaction. I sign the device. I sign that transaction with my key, and I broadcast that out to the rest of the network. And everyone else gets a copy of the fact that Daz sent Sean X amount of Bitcoin, and now it's in his account. And the really important thing in comparison to a CBDC is there is absolutely nobody on the planet that can stop us doing that. And that's the power of it.
One thing I want to say there is there's nobody that can stop you, or say me sending Bitcoin to Daz or Daz sending Bitcoin to me, if you hold the keys, your password to your Bitcoin. If you buy Bitcoin on something like CoinSpot as an Australian exchange or a centralized exchange, they can stop you from using your Bitcoin, from spending your Bitcoin. You need to go a little bit further and you need to put that Bitcoin into self-custody. Daz, can you explain, you said Bitcoin's a bearer share. Can you explain what self-custody is at a very basic level and how people can go about, say, from their bank account to an exchange, to being able to hold the first time in human history where we can literally hold property and we can die with it? I understand that's extreme, but I think you're a very good person to be able to break down this complex topic.
Yeah. So there's a saying in Bitcoin circles: not your keys, not your coins. Okay. And essentially what that means is if you don't have possession of your keys, if you don't have the password to be able to unlock, that's not your Bitcoin. You have a claim to Bitcoin. And it's like the bank. You put your money in the bank. That's not actually your money anymore. You've gifted it to them. And all you've got now is a claim on that balance that they say you own. Very similar with Bitcoin. So when most people will come across Bitcoin the first time through an exchange, whether that be a Bitcoin-only exchange like what we've got in Australia, like Bitteroo or Hardblock or Amber or, dare I say, CoinSpot. When you have a balance on an exchange, they are not your keys. They are in control of your keys. So when it's not your keys, they're not your coins. So this concept of self-custody is, how do I then take possession of my keys and the possession of and the ownership of my ability to control the Bitcoin that they lays claim against that key, if that makes sense. So there's a number of ways you can do that. And this is where newcomers to Bitcoin get a little bit intimidated. So we always advocate, do not leave your keys, your coins on the exchange. If you have Bitcoin on an exchange, we have seen numerous examples with, and only just recently, a massive exchange in the US called FTX blew up and they seized people's assets. So if you had any sort of balance, whether that was fiat or Bitcoin or any of the other altcoins that they offer, it's a bit of a casino over there, they seized them and you lost all your funds, and that wrecked a heap of people. And that's why we're always very strong advocates for taking possession of your keys. Now, that can be intimidating. And with great power comes great responsibility. So there's, like we said, it's permissionless and there's no back button and there's no CEO and there's no call center for you to call up and seek help when it comes to Bitcoin ownership. But we've launched a service on Looking Glass at the moment called Coddle. And that's basically the whole premise behind that is we will hold your hand. If you need help on this self-custody journey, explaining exactly what that is, what you need to do and how to do it, then reach out. Go to the Coddle server. That is a paid-for service, but you can speak directly to Seb or I, and we will hold your hand while you do that. Don't think that you need to. There is plenty of services out there that will help you grok what that exactly means. But essentially, all that means is that you are going to spin up a private key, and then that private key can then go and spin up a whole heap of public addresses. Now, when you want to send Bitcoin to somebody, I essentially ask you for your public address, and that's very akin to me asking you for your bank account details. So, Sean, I want to send you some fiat. What's your bank account details, or what's your pay ID or your OSCO ID? And I can get that, but I can't do anything with it, right? It's useless information to me apart from the fact that I can send you some fiat. Exactly the same way we call them public addresses. And you give me a public address, I can send you some Bitcoin, and that's the address and the balance that gets uploaded to the blockchain, and then everybody gets a copy of it, so that we all know that there's an address here and there's a balance to it. Now, the beauty behind the private key rather, is that's then cryptographically is your ability to sign ownership of that transaction, sign ownership of that public address, and essentially all it is a really, really, really big number. So this is cryptography. So it's all mathematics. Now, in order for me to be able to just stumble across Sean's private key, it's akin to being able to find one atom in the entire universe. That's how big this number is. So it is theoretically absolutely impossible for somebody to just stumble across a random atom that happens to, a random huge number that happens to unlock a Bitcoin balance. Now, that big number is too hard to deal with, right? And that's why we have introduced these things called cold wallets or cold storage, hardware wallets. So these hardware wallets look like, anything from just like a USB to a calculator kind of thing. And literally all it does is stores your keys, so that you don't have to remember this really big number. It just stores your keys. And it also gives you a little bit of functionality in order to be able to sign and broadcast those transactions. So when Sean wants to send Bitcoin from this balance that's on the blockchain, we know Sean has this public address and his balance. If he wants to spend that Bitcoin, he has to sign that transaction cryptographically, and that's what we use these hardware devices to do, is to say, I am in possession of this key, I'm going to sign that transaction, and then I broadcast it to the rest of the network, and cryptographically, we can prove that that is indeed a valid transaction.
After you do it once or twice, it's very easy, but that first time that you do it, it can be a little bit complicated. There's plenty of great resources out there. BTC Sessions is a really good person on YouTube. A shout out to Ben with his education if you really want to dive down there. If you're looking for a very easy way to do it, reach out to Daz. You'll find his links below as well. I'm not paid. I don't receive a kickback or anything for that. If you need help doing it, or you just need to talk to someone that knows that's done it before, good person to reach out to. Daz, you've teamed up with the Bitcoin Advisor. Great friend to the channel there. I'll be interviewing Andy later on this afternoon. That video will already be out. But Jake and Peter Dunworth, two incredible individuals doing some amazing things there. What's that partnership look like, and how has that incorporated into Looking Glass Education? And one thing I want to say is Looking Glass Education, I had a banging video that came out with Greg Foss. What a guy. You've also partnered up with him. So you are partnering with the best and the brightest minds in Bitcoin to be able to educate and inspire people. But what's the integration with the Bitcoin Advisor been doing, and how's that come about?
So that partnership come about from this coddle service that we were just about to launch. And we come to the realization pretty quickly that not everyone is going to be super comfortable managing their keys. So we spoke about this before. And I said, with great power comes great responsibility, and there's no back button or customer support with Bitcoin. So if you take self-custody of your Bitcoin, and this is not to scare anyone off, but it's just you're going to have to do a bit of work. You're going to have to do a bit of work to understand the best practices for managing those keys. And it is simply outside of the purview, skill set, technological capability of some people, and that's an absolute fact. So what the Bitcoin Advisor has been able to do is introduce a collaborative custody and inheritance planning model. And Pete Dunworth says this really well. If you can't write down your custody solution on a piece of paper, hand it to your closest loved one and say, recover my Bitcoin, you've overcomplicated it, or you haven't explained it, or you haven't thought it through. And I'm like that with my custody model. So I have a multi-sig approach, which means I have multiple keys that unlock my Bitcoin, and they're geographically distributed. I'm a public-facing individual. I didn't want the circumstance to arise where anybody could come to my home and get access to my Bitcoin. I just simply removed it from my situation. Now, the problem is my wife is not into it as much as me. She's a Bitcoiner, but she doesn't understand the technical capability required to be able to manage those keys properly. So this was a hole in my game, and it was really a solution I was looking for. And when Pete sort of approached us with an opportunity to work with them, it's kind of rounding off all of the options for us as Coddle to be able to help people take self-custody of their Bitcoin. And what they've done really well is built in this inheritance planning model where you've got safeguards in there. So we've said many times on this call already, not your keys, not your coins. So what the BTC advisor has managed to do is create a collaborative custody model using multi-sig, where you hold a key yourself, Unchained Capital holds a key themselves, and the BT advisor holds a key. So you're putting a little bit of trust in the system. That's absolutely true. And if you're a Bitcoin maxi and you already know how to self-custody your keys and you're comfortable with that, potentially this is not the solution for you. But for the people who are absolutely shit scared of that responsibility of managing their own funds, and they do exist, I've got a really good example. Actually, I've got a friend of mine, very technical. He's same qualifications as me, HV electrician. We work in substations and we do very complex tasks. He absolutely would not take self-custody of his coins because he didn't trust himself to be able to manage the seed phrase, be able to manage those 12 or 24 words and the device in a responsible manner, and he was scared he was going to mess it up. This is the exact kind of service for that individual. And I've since circled back with him, and we got a call coming up. We're going to sort him out, because when FTX blew up, he still had his coins on an exchange.
Oh, no.
And I said to him, it wasn't FTX, thankfully, but I said to all my friends, you've got to get your coins off exchanges because this is blowing up. Take self-custody. Yep. It's easy. He wouldn't do it to the point that he sold his Bitcoin because he's like, I can't take custody of this. And he had a significant amount, right? So he was legitimately scared, but he ended up selling all his Bitcoin. But he sees the value proposition of Bitcoin, but there simply wasn't a service that he was comfortable with where he didn't have to manage all of his keys. Now, what Pete's managed to provide, in my mind, is a really good solution in between with a lot of protections around this idea of not your keys, not your coins. They've built in the protections so that they can't collude and steal funds. There's layers of protection in there with like 2FA and video calling and all of this sort of thing to be able to protect people from being able to, so that you are still in possession, you are still in control of but we've just got some things in place to help you in case you do suffer. And we're trying to mitigate against insufferable losses, like, where you can't turn it back. And that's really where that value propositions come from. And once I looked through the model, don't trust, verify, really dug into what they're providing, I just went, this is the bridge between self-custody and what's coming. I firmly believe that it's only a matter of time. And I know a lot of good people who run good exchanges like Amber App, Bitteroo, Hardblock. They're good people that run. I know them personally. But I firmly believe the days of exchanges are limited. Eventually, banks will want to custody this. As soon as the regulations are sorted, they will offer you the ability to turn your fiat into Bitcoin, but they will also want you to custody it there. So what Pete's been able to provide here is I believe the good, safe intermediary step between full self-custody and banking co-opting your and owning your keys, as well as this idea of the ETFs, right? So ETFs are going to come about. They're absolutely on their way. And a lot of people will allocate to Bitcoin through these ETFs, but they will own your keys. That is not your keys. You only own a claim to Bitcoin. So how do we then introduce a service where we can make sure that it's still your keys, but we're just helping along the way if you're just worried about your family not being, if something happens to you and you die with your keys in your head, is your Bitcoin lost, or is there still an option for the executor of your will to be able to recover your funds? And that's really what Pete's been able to do very, very well. And when we discovered this, we went, holy shit, we need to be involved.
As soon as I saw what Jake and Pete and now Andy, what they're doing together, mate, same deal as well. For the everyday Bitcoin people that have been here for a while, they're not going to use a service like the Bitcoin Advisor or Coddle, but it's for the people that are new into the space that understand that it is their last chance at freedom, potentially, that they want to be able to have something where they can control it, be able to take it off. With Coddle, they can reach out to you guys and you can walk them through the process, and then they hold all their keys. With the Bitcoin Advisor, you work together with them, and then there's three different keys in different places. No one can get together and spend your Bitcoin. I talk about it more in detail with the team, both Peter and Jake. I'll touch on it in the Andy video as well. So check that out. But I've put their link below for anyone that may be interested, but it's just about education. Don't do something too fast. Don't rush in. There's this word within crypto and Bitcoin called FOMO, the fear of missing out. And that's where people panic and they dive in and they start making mistakes. Slow down, stop, and get the information, the education. Read a book. It's 100 and something pages, 150 something pages, including the bibliography at the end. It's really not big. Daz has got a course, Looking Glass Education. Talk to him. Talk to Seb Bunny, Daz Bea. Talk to the people at the Bitcoin Advisor. But Daz, what would you like people to take away? Bitcoin can be a little bit complex when you're hearing about it for the first time. You do a really good job of breaking it down super simple. But what is that takeaway, that key message for people that are starting to move forward and starting to take this seriously as they should?
Yeah, look, I think the most important message is just to start learning. There are so many resources. There's so many different ways that, we're really lucky now. There's guys like yourself starting podcasts that, trying to really speak to a variety of different people in a variety of different ways. So everybody learns slightly different. I'm a reader. Not everyone likes to read. Some people like visual, some people like audio, but there's a plethora of information and services out there to help you start learning. But you absolutely need to start learning about Bitcoin. Like, it's no option now. You need it. It is, your family's lives are at stake. And that sounds really hyperbolic, but I absolutely believe that with all my heart, that people, especially wage earners, really need to start understanding how the monetary system is working against you. And this thing is vital for you to be able to navigate the next couple of years, because it's going to get hectic, man, and it's going to get really bad. And Bitcoin is hope. It really, really is hope. And I just hope that anybody listening to this who's curious just takes the time. Go to Looking Glass, have a look. Go to BTC sessions. There's, video courses out there. There's, written courses. There's audio courses. Just start learning and don't stop. And most people will find once they sort of start tearing the lid off, it becomes really addictive. Like, it is like, what is this thing? Like,
yeah.
And sooner or later, you do find yourself, you're 1,000 hours down, you've really got it. And I would just also say as well, just going back to this early point, sorry to harp back on it, but we mentioned before that Bitcoin Advisor service isn't necessarily for the maxis. I would say that it actually can play a part. Like, for me personally, I've just shared that story with my wife. I'm going to be using this service. I'm just through the process now of setting up my own, because you don't have to think about it as a be-all and an end-all as well. It's a solution for a portion of your stack that you absolutely want to build for generational wealth. I've got a self-managed super fund. I'm going to be using that service to manage my self-managed super fund, because it's something I don't need to touch for the next, I'm not allowed to touch for the next 30 years, 20 years. And then I'll have my own personal stack that, my wife can get access to straight away and all that sort of thing. So it doesn't have to be an all-encompassing thing. But if you're starting to build, and if you're in Bitcoin now, you will be, no matter how big your stack is now, it might be a very humble stack, but it's only a matter of time before you will be a high net worth individual. If you're here now, you will be a high net worth individual, and it's time to start thinking about what that means in 10 years' time. Because your Bitcoin, theoretically, unless you start spending your Bitcoin, it's going to increase in purchasing power, and it will do that at an alarming rate. And all you need to do is just start learning about it, because like I said, great power comes great responsibility, and there's plenty of resources, but you have to pick up the book. You have to pick up the podcast. You have to start the YouTube channel and start learning about it.
I'll also be using the Bitcoin Advisor for my self-managed super fund, so we can dive into that video with Andy, which is coming up next. Daz, absolute pleasure. Enjoy this video with Andy. Have a beautiful day. Be blessed. Peace.
Thanks for having me.